Welcome to VC's Off the Record. This is Real Talk with Real Investors. Your host, Gayle Jennings-O'Byrne, CEO of Wocstar Capital and co-founder of the Wocstar Fund, has spent 30 years in finance. And I'm here too. I'm Victoria Bird. I'm the Chief Content Officer and Creative Director of Wocstar Media. And I've spent 30 years in media. We champion female entrepreneurs, we champion diverse teams, and we're both passionate about stories that change old narratives. We're looking to inform you, inspire you, and help you get your bag and your dreams.
Hey, lady.
Hey, lady. People are going to get sick of that, but I don't care. I love it. Always a pleasure to sit down and talk and think about what we want to share with people. And today is going to be a really interesting show because we're going to talk about something that you wrote an op-ed about AI and the idea, and I'm going to read it because I want to get this right. VC's AI love affair, and is it a bubble waiting to pop, right? So first of all, explain what that means, right? Because I don't know 100% if everybody's going to get what's happening between AI-focused startups and non-AI-focused startups in this world.
Yeah. Well, listen, I would love to be wrong, but I worry that the AI market is heating up really fast and almost creating a tale of two cities in some way. That's so much capital, and it needs to, because AI, true AI, and the build out of it is very capital intensive. So yes, there's a lot of capital flowing towards AI, but I worry on two fronts about this tale of two cities that I think is coming. One is that we have a lot of investors who don't truly understand the technology. I'm one of them. I'll raise my hand, right? I'm learning every day. And so I worry about people jumping in with that herd mentality that we talk a lot about into the space. And so it might be inflating some companies' valuations and some segments of AI. And then I also worry about companies that are not AI, and are they truly getting the look-see that they should, and also the capital that they need to grow? And so I just wonder, are we going to create this imbalance of capital flows to AI companies and non-AI companies? And then I worry about, so many things have AI on their website and their marketing material and their pitch decks. And so I'm really glad that today we've got Ken Goodwin coming on to talk about this, right?
Person.
And what I also love is that he is a leader in the space. He's a voice, and he's talking about it from a global perspective, and he's of color. And when people listen to today's episode, I hope they walk away with thinking about how do they play in this space?
Because it's an important space. It's a space that's happening. It's not a flash in the pants. This is something that is occurring and very important.
It's here. And listen, we, the investment community, are going to continue to invest in it. It's important. There's great technology that's coming out that's going to benefit all of us. Countries are investing in it, right? Military departments, public agencies are investing in it. This is not going away. But I want our community to be building in the AI space. And so I'm really excited for today's conversation with Ken.
Yeah, let's just get to it because he's fabulous.
Let's do it.
Check this out. We're going to take a quick little ad and she'll be
right
back. She'll be back. This episode of VC's Off the Record is brought to you by Wocstar Ghetto Film School Entrepreneurial Academy.
Hey, Wockstars, welcome back. My guest today is Kenneth Goodwin, managing partner and founder of Jeanensis Ventures. Ken, thank you so much for being here. One, you are like the man about town. You're flying everywhere. You're traveling everywhere. You're meeting with people everywhere. So the fact that we got you in studio, I'm just going to give you flowers for being here and making the time. Thank you.
Well, it's an honor and a privilege, Gayle, to be on your show. And yes, I'm flying, but I'm flying quietly.
Okay.
Flying under the radar, actually.
Stealth mode. I like it. So, hey, listen, I'm so glad you're here because part of why we started this was to get investors in the room telling about what they do, how entrepreneurs can find them, learn about what you're investing in, what gets you excited. And so I'm just really glad that you're here to share your journey with people. And I want to start with the name of the company. I think there's a story behind it.
There's a nice story behind it, and it's called Jeanensis. And God bless my mom. Actually, it's a combination of my mom, Jeanette, Genesis in the Bible. So there's a deep faith in this, because faith is my value. At the end of the day, it's about your principles and your values. So I tie that into the name. And Asia is where I spent 30 plus years of my life, in Japan. And that's where I kind of put it all together. I said, well, let's start off that way. And Jeanensis was a foreign direct investment firm. So we did a lot of FDI. Our first client was JETRO, Japan Exchange Trade Organization. So we won the national contract twice. So that gave us a great opportunity to go back to Japan, to bring business overseas, to small media enterprises who would never thought that they could sell their product in Japan.
And you know what I love about the small, medium enterprises is that oftentimes they don't think about markets outside of the U.S. And there you were helping them access markets outside the U.S.
This is so true. We were finding ways to really increase their cash flow. And you know this very well, Gayle. You know this extremely well, that in order for you to build valuation, you got to increase your cash flow.
Cash flow is queen.
That's right. Cash flow is queen. That's absolutely right.
Absolutely. And particularly these days, we talk a lot, and I know in our portfolio with our entrepreneurs in the fund and at the academy, about cash flow and cash management. Because it's a choppy time to be raising capital. And so you've got to, the capital you have on hand, you've got to make really good use of it and be really productive and efficient with it. So I'm glad to hear you talk about cash flow. But let me back up a little bit. So often we ask entrepreneurs to give an elevator pitch and tell about themselves and their company in elevator pitch style. What would be your elevator pitch on yourself and Jeanensis?
On myself, wow.
I know, right? Putting you
I never really thought about
in
that.
The hot seat. Yeah. Or let me flip it this way. What's a few things you want people to know about you? Maybe that'll help.
Oh, perseverance, person of faith, integrity, persistence. Wow. Global.
And you were influenced by 6 sisters.
6 sisters, exactly. 6 sisters and 1 brother. 6 sisters.
So that's where the resistance and resilience and the grit comes from then, probably.
It did, but you also the knowledge base. I look at my sisters and the appreciation for women. I mean, I really look at the strength of my sisters. And to this day, my son, I have a 15-year-old son, and he always asks me, say, Dad, why you pay attention to your older sisters? Well, they are my older sisters. First of all, now there's this level right there of meritocracy and respect. And the knowledge that they have, that there's nowhere in the world that I can get that knowledge. That is, it requires me to sit there and listen. And I pass it on to my son. I said, at times, the best way to learn is by listening.
Yeah. Yeah, we talk a lot about that on this show. Because so often entrepreneurs, when they sit down with you, and they're passionate, right? But they just want to tell you all about their company and then ask you for capital. And we spend a lot of time talking about the gift that is listening and how you can actually learn more about an investor by listening to what they have to say. So I'm glad you're passing that on to the next generation. Tell me about the firm. How's it going? What are you guys up to?
We are always evolving. In fact, we're at a point where and I took some time to really ask myself, the venture capital space, you know very well, it's a broad space.
Yeah.
So you have the larger VCs and you have the smaller VCs. And I actually think it's a bit diluted to a certain degree. And what I mean by diluted, and I'll go back into, I'm a banker by trade. I started my career at the Federal Reserve Bank of New York and then went into some major bulge brackets, RBS, HSBC. So I go back into the banking function.
Yeah.
And VCs were different. You really managed the capital base. You managed both equity, debt, cash flow, balance sheet, income statement, all these things. And I realized in this day and age, it's all about the face.
Yeah, you got a lot of people running around just writing checks.
Exactly. Check writers who believe that they are VCs. Now, writing the check doesn't make you into a VC. It helps. It helps a lot. Believe me, it helps a lot.
Listen, it gets you into deals.
Exactly. But it does not actually help the business to sustain itself. So there's got to be a level of sustainability where companies grow across different stages. So I love the life cycles of companies. I love how they grow.
Yeah.
What we do that's unique is that we actually talk about whether or not you want to go Series A, Series B, Series C. Do you want to go IPO? So we have a relationship with NASDAQ, New York Stock Exchange, and the Tokyo Stock Exchange. And we talk about direct listing because we want our founders to get to the point where it's a good decision to say, I want to be acquired or I want to go public. And I like that. I like the public side of it because I've seen the benefits of public. I was just at an event recently where the CEO was a woman, and it was the 10th year anniversary at the New York Stock Exchange, and the energy that she had was unbelievable energy. And then, of course, the benefits of that, because now you have capital in the public market, you can do more things, you can hire more people. I mean, all these things.
Listen, that's wealth creation.
Exactly. Exactly. That's it. Wealth creation.
All right, but tell me this. Come on, let's get really into it. What are you guys investing in? What size checks are you writing? Who do you want to see come in and talk to you about their company? Because it could be AI, could be crypto, Bitcoin.
You are that is the secret sauce. I mean, check size for us is 250 men, about 2 million. We're willing to go down lower, depending on the type of company that actually has the intellectual property.
So you'll start at 250 and go to 2 mil?
We'll go to 2 mil, but we drop before to about 100, 100K.
Okay.
And it's because of the fact that that company has not only a solid management team, but they're able to have a product that adds to the enterprise value. Now, uniquely, you said AI. We do touch on fintech. Fintech is our expertise. Fintech is very broad. So for us, fintech would include agritech, edutech, SaaS, cloud-based types of companies. AI for us, we're very particular about AI because you hear this term a lot.
Thank you. I'm so glad you're going to break out through this AI hype because there's too much throwing the term around. All right, so give us the specifics on what you look at when you think of AI.
Well, I think the AI that we see now is very early stage. So the chat GPT, the AI community, it's unique than the blockchain community. The blockchain community likes to use Web 2.0 and 3.0.
Yeah.
The AI community use what they call first, second, and third generation. And they may even go fourth to fifth generation. So when you look at first generation from a historical standpoint was anywhere between 1960s to about 1980s. So that kind of technology that was out there was always data aggregation, meaning that it was always about attracting data, right? Finding data and really crunching it. Data analysis. And then
that was the early machine learning because you had to take that data.
Right.
And then the machines could learn from that.
And then you go into second wave, and we're kind of in a second wave now.
So, okay.
Yeah, so ChatGPT number 4 is the end of second wave. So second wave is more what you have now, generative AI, LLMs, all these terms that you're using, where now AI provides you with some kind of solution. So it takes all that data aggregation and it says, okay, how can we come up with different solutions for you, the audience? Third wave AI is unique. Third wave AI is like your brain. Scary, right? And
it's scary, but yeah.
Yeah, very, very scary. So it's a lot faster, moves very fast, compressed very fast. But the trick is it's a memory. So you and I are data sources, and it's constantly asking us for information about ourselves, but it actually it memorizes everything. And it comes up with different solutions and scenarios. So it's high probability and it gives you and it executes. So that's a big difference.
And who's building in that way are you seeing it in New York? Are you seeing it in Silicon Valley? Are you seeing it outside the U.S.? Where are the founders that you talk to coming from?
Ooh, that's a really good question. That's a great question because that's actually a national security question. Quite honestly, I'm serious when I say that. That is literally why there's this fight between China and Russia, because in the U.S. because that type of AI, it drives defense, missile defense. So that is literally, China's great for it. Russia's great for it. The U.S. on the U.S. side, definitely California. You have touches here in the U.S. I know the person who's the father of third wave AI, Peter Voss. I like to give a shout out to him.
Hey, Peter.
Because Peter's great. I mean, he came to New York many years ago with Charles Smith of the NBA. Another shout out to Charles Smith of the NBA.
Charles.
You know Charles Smith personally.
No. Listen, you know all these fancy folk. I don't know these fancy folk.
But we brought him here because of the AI conference. So about 5-6 years ago, we actually did a conference, the first blockchain fintech AI conference. Peter was the driver behind that. So I got to learn third wave AI. I didn't know what was third wave AI.
Yeah.
And he gave me the example of it. And think of it, third wave AI, think of Amazon Echo.
Okay.
The current Amazon Echo.
Okay.
And another third wave AI application is 1-800-Flowers.com. So your great husband wants to get you flowers and will go on a calendar. But he just forgets, sometimes he forgets because he's very busy. So what happens is the AI uses your historical records, not just order the flowers for you, but also because of your background and who you are, gives you the perfect scenario to choose the right flower for you. And then ties it up to other services.
I love it.
And so that kind of transaction.
Peonies, by the way. If anyone's listening, peonies. But now, how does this transfer to budding entrepreneurs today? Like, is the call to action for them to go build in this third wave? How should they think about where they build what kinds of companies they build?
That's a great question. Both, actually. I would say build your product, because when you build your product, you increase your valuation. We know that the AI industry, I like to say, it's overinvested by a lot of the institutional side. And
it's so capital intensive, right? With these servers and the data mining that has to happen, that I wonder, where new capital is going to come from, right? Because these deals are taking place there in these 100 million rounds and 50 million rounds, and then I wonder for other entrepreneurs how they're thinking about what kind of companies they build. Are they building complementary applications related to it? Are they building ancillary things? What do you see? What do you see out there?
I see, actually, they are building more complementary. My advice to the companies in my portfolio is that when you build, that's part of your investment decision to build. So when you build, make sure you partner. Sometimes you just can't do this by yourself, and you need the right partnership. Now, here's the trick with intellectual property. You got to own your intellectual property. So if you decide to work with a firm, make sure that you also have your rights in check. That's really, really, really important. But you have to build because we're at an earlier stage. We don't want to put ourselves in and I say earlier stage, what I mean by that, we're at the first inning of AI. And this is why I use the generation. Robert Smith talks about fourth generation, right? And he's a billionaire.
Yeah.
And then you have those who talk about fifth generations, right? And fifth generation is coming out of singularity. So imagine what fifth generation AI is. So we're really at the earlier stage. We don't want to miss out. It's better to build a product with someone that's done it before. So now you have a chance. And this is part of the whole communication, storytelling, the whole process that you have in terms of increasing your value. And investors, we love that. We love the fact that you're growing, that you're taking the time to find a way to grow your firm. And you'd be amazed that more investors are attracted to that than to be left out.
Yeah. Yep. I would agree with that. I would. So I love that you are, I mean, you didn't say it, but I'll say it. You're very hands-on with your portfolio companies and the people that for whom you've invested in. What's some of the advice that you give them? What is there any commonality in the conversations?
It varies.
So the answer is no commonality.
No commonality. And part of it is because each one is different.
Yeah.
I mean, I look at Brandon for Aford. He's part of Techstars now. And I'm sure you met Brandon before when he was at the New York Stock Exchange. He's got a whole different background than, let's say, somebody else. Peter Voss is in the portfolio for Aigo.ai. He's completely different. So it varies. I would say there's one commonality. And I always say this, the integrity is very important, but not just integrity in the company, but integrity in your data. And the reason why I say integrity in your data is that, as you know, when you go into the data rooms, you find all kinds of stuff. It's like, oh my God, it's a mess. It's a mess. It could be really messy there. So that transparency of data, the information is critical. Who's on your cap table? Why? Communicate that.
Yeah.
So I always say, be honest with what you do. Don't fudge anything. You don't have to fudge it. And then my other thing to them is cash flow. I always go back to cash flow. Find ways to create new cash flow streams. You don't have to go out and chase VCs. It could be the other way around. I have companies already that they don't want VCs now. They want it at a later stage. So a part of that is part of that strategy. So focus on building your business. This is why you get up in the morning. You got up in the morning not to chase a VC.
Yeah, listen, revenue is the best form of capital there is.
Right. A revenue generating model that really makes sense.
And I hope everybody hears this, because I think, and listen, I love Shark Tank and I love what it's done for the community. But I think there's a little bit of this mindset of, I'll have a great idea, I'll put it down on paper, and then I'll go get people to fund it. And we kind of lost the whole notion of like, build it, put it out there, get a few sales, throw that back in the business, get some more sales, throw that back into the business. So I love that you said that about revenue and cash flow, because we got to get back to the basics.
Oh, back to the basics.
And you know what? Where we need the basics too is for the non-AI companies.
Exactly.
I mean, because listen, right now AI is so hot, right? Everyone is putting money in. I almost worry if we're coming up to a bust because we're at such a boom in AI. So I do worry about the non-AI companies and whether or not they're going to raise the capital that they seek. It's a tough market.
It's a tough market. We saw that with one company. I can't think of the name of the company, but they were valued almost like $5 billion. It was like a ridiculous amount, but it was a mixture of equity and debt. And it was mainly on the institutional side. So you can see that actually happening. I mean, you literally see that happening. However, here's the opportunity. I always look at things. It's like the story of going to Bear Mountain and the eagle's flying to the top, and the eagle sees that, hey, there's New York City right there. It gives you perspective. And there's always two sides to a coin. And so the opportunity there is to learn about what's happening in this space. We know AI, no disrespect to blockchain and crypto, because I think crypto and blockchain has reached a level of maturity, which is great.
No, we need that.
We needed that.
We need it.
We needed it. But AI is unique. And I always say that blockchain kind of help us prepared for AI.
Ah, that's interesting.
It's a transition. We're going through a unique transition in technology. Now, here's the unique thing about this. It's not anything new. We actually had this before. We are...
Decades we've had it.
Right. So we were far more advanced way before what we are now. We're just starting to realize this stuff.
Because you have raised capital. You've raised lots of capital. What do you think was the motivation behind the people that invested in you? Like you were sitting in that meeting. Was there a moment where you're like, oh, this guy's coming in, this woman, she's going to come in, she's going to invest?
Boy, that's a very good question.
I only give good questions. You act so surprised that I give a good question. They're all good.
A lot of trust. You'd be amazed. A lot of it was trust. A lot of it's not easy to raise capital. It is very hard. But when I say trust is in the form of your word. Trust is in the form of your character. Trust is in the form of the make of who you are. So they didn't just look at me as an investor. People looked at me and said, wow, he's got a lot of other things. And that played a big role.
But so let's say Bob introduces you to Sally, and Sally takes a meeting because Bob said, hey, gotta check this guy out. He's got this fund. It's doing some cool AI investing. How do you build that trust with Sally? Because you only get 30 minutes over Zoom with Sally.
That's a great question. If it's a referral, you hope that it's referral of your character.
I see what you're saying.
And then this is a space that, this is a challenge in this space. This is what we call human capital. And human capital is where people who know people are able to refer. And that is based off your namesake. Your namesake is very, very important. And for me, I take time to really, 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 and you've been around me. Yeah. You can see that he is really in his namesake.
No, you have a good reputation on the street. Oh, for sure. Sure.
But that's important. And not just here, but globally. Wherever you go, the one thing you have is your name.
It's interesting you say that because my mother always says to me, you never know who's watching. You never know who's watching.
I watch you. I say, you know what? And I'm not cutting you off here, but I love what you're doing, because I said she's one of few that's actually working with people. Most people don't work together. And this is a challenge. The challenge that we have, and I say we meaning
the collective,
The collective. The challenge that we have is everyone's chasing after a dollar and they're only getting a penny. And that is a big issue here. If you're trying to get a dollar, you may not get the dollar by yourself. So you might as well work with other folks, work together, and figure out a way, because the impact is broader.
We got a glimpse of that when we went in lockdown for COVID, right? We all came out of there like missing being around people, right?
Exactly.
Like when we were able to, come out of, sheltering in place, people were like so happy to be together again. Reminded us, why we enjoyed family. Something you said earlier about the people you've invested in, I want to flip it. And what's an investment you didn't do? Ooh, and why?
Oh, wow.
Like, what are some of the things that kind of were like, no, I'm going to pass on this, or I'm going to pass on that? Anything come to mind?
I can give you a couple, actually.
Okay. Speed round. 1, 2, 3. Just list them.
Oh, wow. I can give you one that was actually blockchain based that I knew, and I knew the founders were strong, but the actual product itself, when I look into the product, it was, and I can't disclose this.
No.
I have to be very cautious about that.
Okay.
That was product driven. The most recent one was actually in terms of the revenue generating model.
The model was
weak.
Okay.
That was the key. It was the management, actually. It was, okay, you have this product, you have this idea. Who are you selling it to? Who's your client base? And it's like people don't define their client base. Like, you got to define who you're selling this thing to.
Yeah, that is so. I see that a lot. In the Wocstar Academy, we talk a lot about who's the client, whose problem are you truly solving. What's your third one? What's the third one?
Well, the pricing is key too. That's why I was going to hit that on the third one.
Okay. Because pricing.
Most people, what happens is they may think, and I've no disrespect to our colleague. We got somebody who did a video on pricing, which is fine. But pricing is unique because pricing is discovery, it's suitability. So now you have a product and you're trying to sell your product and you're trying to find the right price for it. The best way to find the right price for your product is understanding your client base.
Well, that's that conversation you need to be having at all times with the market.
With your market. But here's, how do you get that? So my challenge to this particular firm was, okay, this is an opportunity here. So this is an opportunity to capture data that you didn't have before about your client. So maybe there's a way to do an application where you can get that information to discover where they're at, whether this client is going to buy this service for this price. And then what happens is you take them on a journey. You don't stick with one price. So you may start off, I give you an example, you may say, well, I think it's $50 and the client is saying it's $30. Okay, let's go at 30. But now you create another service that goes to 40.
Add value.
Add value.
You got to always add value. I love that. I would say, not that you asked me, but one of the things that can turn something to a no for me is when there's not a clear understanding of how to defend your market share. In some ways, it's easy to, not easy, but you can acquire customers, but how you keep them and how you keep your market share, that I'm always listening for. Because it's competitive out there. People are going to come for you. If you've got something good in the market, they're going to come for you. So for me, I'm always listening like, does this person know how to defend market share, defend their customer base? I
love that you said that because that is actually, I went to an event recently and I love the fact that this event was sponsored. I want to give another shout out to Fintech Partners. Fintech Partners did an event recently where they brought in African-based fintech payment companies. And one of them, Flutterwave.
Okay.
Right. So he showed up but there's several of these Flutterwaves. So there's a lot of these companies that raise significant amount of capital. There are Series A and B. They got EBITDA, like 30x EBITDA. I mean, the numbers look great. But the challenge is that it reaches a point where everything kind of scales out. So what do you do next? Do you try to retain your client? And my challenge to them is, what was your differentiation factor? Because you guys sound all the same. So how do you differentiate yourself from everybody else?
Yeah. Ooh, I'm going to leave it right there. Yeah. That's the question of the day.
What makes you different, right?
That's right. All right. So final, I swear, listeners, my final question for Ken, because I could talk to him all day. What's the best way for people to get in touch with you? Are you an email guy? Are you a texter, a Twitter? Where do you hang out?
I'm not a Twitter.
Instagram, TikTok. I mean, you got a fabulous suit on. I could see you, on TikTok.
Wow. You read my mind very well.
You going to another event. My feelings are hurt.
You literally read my mind.
You did not dress for this
you're a mind reader.
You didn't dress for this podcast. You got another event. I know you. But seriously, what's the best way for people to stay in touch with you?
TikTok is something that we're working on now. But I'm an email person.
You're an email person.
I'm an email person. Kenneth A Goodwin at Jeanensis.net, I use a lot of LinkedIn, believe it or not.
For everyone listening, you will get Ken's contact information because he is writing checks, he is supporting entrepreneurs, and he is the real deal when it comes to AI. Thank you for being here today.
It is such an honor and a privilege. I am grateful to be here. And I love what you're doing. And I love how you're helping our community to grow, not just here in New York, but globally.
Thank you. Thank you. It's mutual respect. I mean, you are on my list of folks who deserve flowers so many ways because you've really helped me to be and get here to the place I'm at now.
Well, that's the other way around.
All right. Enough of the love fest. Thank you, Wockstars. Tune in next time for another great episode of VC's Off the Record.
This episode of VC's Off the Record is brought to you by Wocstar Ghetto Film School Entrepreneurial Academy. Okay, so that could have really gone on for another hour.
Right?
Yeah. No, seriously. I took
Can
notes.
we have him come back?
Yes, I would like that.
I would love that.
I'd like that too. He's still in the room. Come back, okay? He's shaking his head, yes. That was just behind the curtain. It's okay. So this is what I
Is
wrote.
that like that fourth wall, like on reality shows?
First of all, I loved that he said, writing a check does not make you a VC. Hello.
I mean, can we
'Cause
just
I was like, I
drop
thought
the
that was
mic?
the point. So what? So break that down for me. What does that mean?
So my takeaway from that is that it's not simply about writing a check that makes you a good investor or a venture capitalist, but it's how you work with the companies that you invest in, how you work with those teams. And so for me, the takeaway as an investor, as a peer, is am I doing the work with the companies?
So to flip that, if somebody's listening and they have a company, they're looking for a VC, is it equally important for them to find someone who's not just going to write the check, but also help build them?
And there it is. That's
Yeah.
exactly right.
That's really great.
That's exactly right. And we have choices on who gets on our cap table. There's enough money out there. I know it doesn't feel like it, and there's days it doesn't feel like it to me either, but there is money out there. There are investors out there. Now it's about finding the right ones. I mean, in Wocstar's governance policy, we have a no asshole policy.
Mm-hmm.
It's literally written in there. When we went for our B Corp certification, the consultant working with us, she cracked up when she saw it in there. She's like, "You weren't kidding." I said, "Absolutely not. It's there in black and white. No asshole policy." So absolutely, for our listeners, I want you to know there's capital out there and you have choices in who comes into your company and who invests in you. And so, yes, if they're not willing to work with you and answer the call when you need them, that might not be the right investor for
Might
you.
not be.
But yeah, I love that he.
What did you take away? What stunned you? There were a couple things that I saw you go, oh, what really?
Yeah. So I think the first one was, as much as he is like this amazing AI, like he's just future of technology, right? Like he plays in that space. I can't even keep up with him, right? He's playing at this next level, next gen, right? He's talking about different generations, right? He brought it back to cash flow.
Cash flow is queen.
Cash flow's queen.
Yeah.
And so as much as he is in these futuristic technology spaces and places, and he's traveling the world, talking and seeing this technology, he still comes back to the basics. And I hope everyone heard that, right? Like cash flow is queen, having a strong revenue model, having that conversation with your customers to know what pricing looks like. Maybe the price you want today, maybe you don't start there because you got to prove and demonstrate the value to, justify that pricing. So I love that he brought it back to the traditional basic building blocks of building a really strong, successful company. And then I liked how we talked about public markets. I think we've gotten away from having that exit conversation, right? So much of the conversation is about what we invest in, who and why, and the technology. But at the end of the day, he's got investors that are looking for a return. He's managing people's money. And so having those conversations and working with the entrepreneurs to get on a path and have a strategy in place, I thought was really cool that and then all of this was just reaffirming for why I wanted him on the show.
Yeah.
I want
We
people to
definitely,
know him.
we're going to do part 2.
Yeah, I want people
For
to
sure.
know him
For
because
sure.
he's
All right,
thinking
next
next
time.
level.
Next time. I love that he also talked about trust. Yeah. Another basic, right? Another core thing.
Building block.
Yeah.
Yeah,
It's good stuff.
good stuff.
Bye, guys. Thanks for hanging with us. This podcast was produced by Wocstar Media in New York City at the Podstream Studios. Be sure to follow VC's Off the Record on Apple and Spotify. We're also on Sheconomy, the State of Women podcast platform. Please consider giving us a good review or share it with someone. Let us know what you want us to talk about on our socials and our YouTube channel. You can find us at wocstar.com for all the information.